Welcome to Ecn Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar edges higher on Wednesday and reclaims the 65-cent handle after China suspended 24% tariffs on certain US agricultural imports, boosting trade sentiment. China's services PMI also eased to 52.6 while Australia rose to 52.5 as the RBA remains cautious after holding rates at 3.6 on Tuesday. In the US, the shutdown drags into the sixth week, keeping the US dollar index above the 100 mark, while odds of a December rate cut fall closer to 60%. In overnight data, the US ADP jobs beat expectations with 42,000 new hires. Turning to the technicals, they have improved slightly from the bounce, but we still need to see a bit more work to the upside. A break above 65.15 could add a trigger to the upside target of 65.5, with 66 cents still capping. Any pullback still views demand anywhere from 64.30 to around 64.70. Moving on to the euro, the market was also a little slightly improved as we now look towards a resistance of 115.15. A break there could give further scope onto 115.60, but likely to find supply and also profit taking around 116.15.35. Still keep an eye on the US dollar index due to the fact that we may see a slight weaker play into the end of the week. Dollar yen also rebounded off the key support level, which was seen at 152.90 to 153.10 after the Bank of Japan minutes revealed caution on further rate hikes. Given the fact that the market is still toppy around this level that is seen around 154, could still see a down test, but for the market to turn negative, we still need to see that break at 152 to see a move down to the region of 151.5. Sterling also showing a slight improvement and looking now towards the challenge of 130.5. A break there could give further scope on towards 131 figure 10 and maybe reassess from there just in case a bit of profit taking comes in. Finishing up with commodities, well, there is still some divergence here when it comes to the MACD and the RSI. And if so, could see a further climb, but we do need to see a break above the level of 3,960 to support the rally. Failing that, still keep an eye on the downside with the key area around 3,888 to 3,900, where previously tested found good demand. And a little bit weaker when it comes to oil, but overall keep an eye from the support area that is seen around 58.5. And if so, could see a bounce that takes the market back to 62.5 as a potential target. That's a wrap. Thank you for joining me. And as always, look at the intraday report. I hope you enjoy the great start to the day.